na mefa so trade a brani a bring na me nye den me moka de bia me sika ni bi be den ebe wo ho. Look at I say then what will I do so that me sika no be wo ho me more, because people trade every day normal worker. As I say, it's just like normal day to day people always go to their markets or better fee no one boka. Then I was say me come market, say me kwaye juma, but maybe fee in my boka. And I have to also say me yera na meet more or sama me sika money so that I will invest into that business again. But yet I'm always on the field, I'm working, yet the outcome or the output is not all that good. So that's what we are talking about here today. So how can we secure a very nice business in this forex trading aspect that we would never ever lose? All right. So that's what we are actually looking at. How can it be always winning? How can it be winning without losing? So if I consistently lose in the forex market, it means that there's no need of me doing what? Keeping on each and every day, or always doing my analysis just to enter the market. No, there's no need. I think the best thing I have to do is to stop trading. That's the best thing I can do, is to stop trading and then find another work and do. But if I can, that it will keep me going each and every day, then I think there's a need for me to what? Keep it up each and every day. I hope you understand what I'm trying to say. It is sanity. In trading, there are some rules that we actually have to follow so that we can be of the best we are looking for. We can be the best. People always go to the forex market each and every day. They are trying their best to get what they want to get. At the end of the day, they rather go and throw money away and come back home with empty-handed. Understand? So that's what actually we are talking about today. It's quite unfortunate that the online streaming is not streaming. Today is today. It's no streaming. But then we will keep it up. We keep on going. Right. Okay. So on the screen, we can see that secret to consistent profit. And that's why because of one or two things in there, that's what. So let's keep in touch as we are doing that. Okay, so let's dive in now. All right. So we are talking about secret to consistent profits, and then we'll be looking at, so in this webinar, we say that this webinar is solely for if you're a beginner with little to no experience in the financial market, stock, forex, option, synthetic indices, whatsoever. You want to gain some insight, you are warmly welcome to this website and this webinar. Okay. If you're a trader who has not yet achieved consistent profitability, this webinar is for you. It's designed for you, all right? And if you have tried almost trading strategies, but it still fails you, right? You have tried almost everything you can lay your hands on, strategy, plans, whatsoever, it still fails you, then you can join this webinar and then you can have something better in it, all right? So the next thing we are talking about is that this webinar is not for any of us here if we are not open to new ideas, all right? Because in this webinar, we are going to share a very good idea that will help you and I, all right? And if you do not want to follow rules of simple system, all right, then if you want to get rich quick, all right, then please, you better go to Takwa and Please, can you hear me? All right. All right. All right. Okay. Quick one, a very quick one. So, as we said earlier, this one I'll just like to apologize for everything. I don't know why, but we promised things are not going to be the same. All right. So we are talking about security to consistent profits. And then we say that this webinar is actually for those who are willing to receive new ideas. Okay. If you are a beginner and then you want to experience something better in the Forex market, it's for you. Then if you want to achieve, you have not yet achieved what consistent profits, all right, you can benefit from this webinar as well, all right. Then if also you've tried almost every strategy, it's not working best for you, this one can help you. But it's not for you if you are not open to new ideas. If you don't want to follow simple system rules, okay, and if you want to get quick rich, then please, this is not for you. So as we said, one of the most popular way to invest in the financial market is by trading the Forex or the synthetic, all right, or the stock, option, future, whatsoever, all right. But our focus will be on the Forex and the synthetic markets, all right. So this method of investment offers traders the opportunity to profit from fluctuation of the rise and fall of the currency pairs, all right, or the currency prices. Forex trading can be a challenging and complex endeavor, but there are certain secrets if you can actually follow to increase the chance of making consistent profit, regardless of your trading outcome, all right. Research has clearly shown also that about 95 to 97 of the people that invest in the financial market throw money away. They lose constantly, they lose, consistently losing each and every day, all right? They lose money. You wonder why this is so, right? You may also ask yourself any of the following questions, right? You can ask yourself whether these traders do not have a trading plan. Why are they losing money? Is it that they don't have a trading plan that they use to trade? Is it that they don't have proven and working trading strategy or system? Ask yourself that question. Is it that they do not understand anything concerning technical and fundamental analysis? You can ask yourself. Is it that they do not use proper risk management in their trading system? Is it that they do not practice patience when in position or something? Sometimes this particular question counts. Sometimes most of the traders do not practice patience. They don't have patience once trading. But that's not the key word here, all right? So is that they don't keep journal. Yeah, we know some people do not keep journal, but that's not the main reason why people are always losing, right? Is it that they don't learn from their mistakes? It's obvious that if you don't keep journal, there's no way you can learn from mistakes, all right? So, but what you're saying that is not the best thing, all right? That is not the reason. So if all these questions that we've been able to ask ourselves, the answer to it is a big no, then why do people always lose money in the financial markets? Why do they lose money each and every day, all right? Why? That's the question. Then why the huge losses in this regard? That's in the financial markets, the Forex option or whatsoever. Why these huge losses that research is showing that about 95% people lose? But we all know that Forex alone is trading about $7.5 trillion each and every day. So where does this money go to? Is it to the big institution? Is it to some investors who can invest huge? Is it the normal retailers that we know, guys like you and I? Why? Let's keep on, then we understand, right? The truth is that traders do not have statistical edge over the financial markets. Any market that they are trading in, they don't have an edge. They don't have an edge at all. That's why they are constantly losing money. So we say, what's an edge? How can you say an edge is? This, we say that edge is a way that in the long run, no matter what happens, either losing streak setting or you could keep on winning, you still have a positive outcome at the end of the day, right? So a statistical edge is nothing more than an indication of higher probability of one thing happening over another in a long period of time. Most traders think having the best trading system or strategy is all that matters. But the question is no. Having the best trading strategy is not all that matters. Having the best trading plan is not all that matters. What matters is that the truth here we are talking is that wins and losses, all right, in the financial markets is based on mathematical and probability methodology, all right? Probability methodology, that is to say that it's a random outcome. Whether you win or you lose, it's a random outcome, all right? Just like when you take, let's say you go to the casino to play a roulette or something, you bet $1, you win $1. You bet $1,000, the outcome for you to win, when you win, is $1,000 outcome. Now, there's nothing like multiplication, all right? But in the financial market, it's not like that. We all understand that you can risk a specific amount to receive a larger amount, all right? So if you have an edge over the market, then if you have this consistent in your trading, you shouldn't lose, no matter how your losing streaks or whatsoever sets in the market. You should always win. That should be the bottom line, is that you should win. At the end of the day, you should be a profit trader. But that's not, right? So if you understand that winning and losses in the financial market is based on probability methodology, that's to say the random outcome for win and losses over a long period term play, all right? If you understand this, you are good to go. If you constantly lose money upon all planned strategies or whatsoever in a long-term play, it's a clear indication that you do not have statistical edge over the market. So you should quit, or you should stop everything and find a way of doing it. You have to be buying courses. You have to be looking for mentors, people that can actually take you through the system, all right, so that you do not lose again. But we, as a beginners, or even most who call themselves they are professional traders, they sometimes go ahead doing the same thing that makes them lose each and every day. Yet they call themselves professional traders. They call themselves professional financial market traders. Yet they don't have anything to show home about. All right. So as a trader, you need to equate the trading just like how any game of chance is played. All right. Whose outcome is always 50-50. For instance, when you toss a coin, the probability that you should get a head and a tail outcome is 50-50. It's a random. But over a long period of time, you win. The rules of probability says that when you take a sample, all right, for a large number, the outcome is 50-50. But the probability of you winning is high at the end of the day. So when you use this one as your guidance in the Forex strategy, in the Forex system, or in the financial market, you always win, regardless of your losses. You always win, right? The reason is that your average win is more than what your average losses. All right. So when your average win is more than your average losses, that's when you risk one. When you lose one. When you win two. Then no matter what happens, you are still a winner. Assume you're risking $1 on a game of chance, but anytime you lose $1. And when you win $1 too. All right. That's right. Okay. Wouldn't you rather prefer this high win game to other 1-to-1 game? Probably you get right. Okay. You are going to choose that game over other. That may be given high probability. Once my win is 1-to-1, there's no need investing into that. All right. So let's look at the chart below. You can see that a long-term play, our capital, let's say our capital is just $1,000. Okay. And then we are risking 1% of it, which is $10 or $10, right? And then our risk to reward ratio here is 1:2. That means when you lose one, when you risk and you lose one. When you risk and we mean 2, right? And then the last sample we are talking about here is 100. We should trade 100 times, right? And our expectation is that we should just risk what 50-50. In this case, we should just risk. Our risk is outcome you are looking for is just 50-50. So let's see, using the mathematical approach, we can see that something we call an edge, statistical edge, is given by this mathematical formula. That's profit and loss, or edge into bracket, is given by what? The average wins times your average what? Your percentage risk. Average wins times percentage risk minus what? Average losses multiplied by percentage risk. The risk here involve your risk reward ratio. That's your average wins multiplied by 2R, and then your average losses multiplied by 1R. All right. So we see that if the outcome here is 50-50, we can see that when I win 2. When I lose 1. You can see that 50 times 2 will give me 100, right? Times 10 will give me $10,000. And then 50 times 1 will give me 50, times 10 will give me $500. So when you do the simple mathematics, we are having what? $500, right? Which is a very good money. $500 in this sample alone is just 50-50. So when you understand this, and then you go ahead, you look at other confluences that can make you stay in a very profound way in your forex trading career. That's where you become a winner. You understand? That's where you become a winner in the long term. This 50-50 we are seeing here is just an example that we are stating. But if you have a trading strategy or a trade, your statistical edge at the end of the day is giving you a very nice percentage, then whatever you risk, you are good to go. All right. So this shows that in the long term, you have a positive result in the financial market. Understand? You have a positive result at the end of the day. So the next will be the second one we'll be talking about, that how traders think and react while in trade positions. All right? Some traders think based on their previous losses, they allow them to affect their mental states. And then when they are trading, they begin thinking otherwise. But let me remind you, in every game of chance, if you start to lose 1, you lose 2, you lose 3, 4, 5, 6, 7, even consistently, the good news here is that your next action, your next outcome does not rely on the previous either lose or win. They do not depend on them, or they do not rely, they have no relationship. So every game which is about to happen is unique on its own, unless the outcome is here. So that's one thing you have to understand, right? Let's say we toss a coin. We are tossing a number of times, and then the first 4 is what? 1 head. It means that we've lost. All right. We bet on the tail, and then we have a head appearing 4 times. Consistently, they are appearing 4 times. The 5th one that we are about to toss, what it simply means that each outcome, whether it will be a tail or head, does not depend on the previous outcomes. They are unique on their own. So you should also understand that one. So forex traders hate to see losses in their trading journal. Whenever they see red lights, they're like, why should this happen to me upon all this strategy, upon all this? You should understand that every outcome of a trade that you are about to take, either today or tomorrow, does not rely on the trade you've taken previously. They are unique on their own. That's why I will tell you that once I post a trade and it hits stop loss, I will tell you that SL hit nicely. And some will be saying, is it nice? Yes, it is nice. Because why? I accept that game. I accept the loss as part of the game, as part of my journey. All right. And I'm running as a business. So in business, we have losses. So you trade just like you are running what? Your traditional business. There are losses in them. So if you cannot accept the losses, probably you cannot accept the wins. Once you cannot accept losses, there's no need for you accepting the wins. All right. So losses are part of the game, and you cannot do away with it. You can only minimize your losses, and that's what exactly we do in our program. All right. In our program, that's what we do. We teach you, or we take you through how you can minimize your losses, and at the long run, you have a better edge that will give you about between 50 to 55, right? 50 to 55 edge. Then when you are starting trading and you are even having 45% of your wins, then you are a better trader. You started well, all right? So that's it. So most Forex traders begin to think otherwise. When the winning streak sets in, they are like, oh, this strategy is not working. They begin to think otherwise. This strategy is not working. Somebody is manipulating the market. This and that. We speak so many things which they are not even supposed to be thinking about. We start thinking about so many things. How can somebody manipulate your trade? Then how did you follow the trade? It means that you don't understand what you are doing. You just entered because everybody was entering, and you also entered some. You do not understand, right? So they believe that their system or strategy is not performing well for them. For this and other reasons, you see the traders begin to trade against their trading plans systems, looking for a holy grail system from other sources. All right, there's no holy grail strategy. I can give you about 7 strategies to trade. I bet you in the next month, you come home empty-handed because there's no holy grail strategy. But we only teach you how you can apply other consequences to make it profitable for you. And that's also what we do in Brewers, okay? So forgetting that trading system will never perform magic until it's been consistently being in use for a very long period of time. All right. So when you understand this, you're always on the good side. So you see traders begin to pull or push their stop loss orders up and down. When they are selling, and then the trade start going against them, they start buying, then they start pushing their stop loss upward. When they are buying, and then the trade start coming down, they start pulling their stop loss down. Oh, it will go. If you are afraid to take a simple loss of now, then you grow up to becoming what? A mother of all losses. So instead of you allowing the SL to hit or stopping the trade to find another high probability setup, you end up pulling the stop loss down or upward. By the time you realize you've taken them, you are a mother of all losses. And then you start complaining. All right? So in doing this, you cannot achieve better risk to reward ratio in your trading journey. There's no way you can become a better trader when you are comfortable pushing your stop loss and upward and downwards. No. Let's say you have newly developed or purchased a trading system, okay? And then in your first 4 trades, you are down. You are risking $10 on each trade, and on the first 4 trades, you are down $40. What do you think is going to happen next? What do you think is going to happen? Oh, you can unmute yourself and talk. What do you think is going to happen in your next trade? Yes, probably you'll not even feel like you start skipping trades. You start skipping trades. You not allow trade to hit TP. When you see trade going against your direction, you can stay there. Oh, it will return, hoping it will return, dragging a stop loss downward or upward, depending on the kind of trade you are taking, all right? But when the trade starts going in your favor, within some few seconds, you close it for $2. You close it for $1. You close it for $3. You close it for this. Maybe you were supposed to take $20 or even beyond based on the teachings we are doing now, all right? We are risking 10 to get 20. And then once you are in profit $5, you close it. You are in profit $2, you close it. Why? You believe that the past trade have what impact on the new one. Why? You've allowed the losses, the previous losses, to have to affect your mental state. So you cannot think properly. You think it's going to be the same. Oh, I saw this some times ago. It came around this time and it went back to hit my stop loss. Let me close it for you. All that you hate in your trading journey is to see a pullback. Why? You don't know what it means by pullback. And you only know that a trade, once you enter, should go straight to the TP and go and hit it. It doesn't work that way. The market does not move in a straight line. You understand? They move up, down, up, down, up, down. That's how the market moves. They make impulse, they retrace. They make impulse, they retrace. Impulse, retrace. This is how market moves. Assume this market is a long market, okay? It's a bullish market. This is how it will start doing. It make impulse, it retrace. Impulse, retrace. Impulse, retrace. Impulse, retrace. Impulse. This is how the market will be moving. But also what you hate is to see market going up like this and it started coming down. That's what you hate. You hate in life. In your trading journey, you hate this, seeing what a market making retracement. And that's also part of the game. If it doesn't make retracement, it will not make an impulsive move. Why? Some people bought before you came in. Therefore, they have read their TP. Once they read their TP, they have to take profits. And once they are taking the profit, the market starts coming down again. All right? To a certain level, then they will enter again. You say people are manipulating your what? Your trade. You should understand, the better you grab this into your conscious, the best for you in your training journey. All right? So let's look at something. Let's take a look at the following charts and trade, okay? And the results of these two guys, one called John, one is Davis, okay? Though they all have an edge over the market, but something really happened. So let's just look at this, what really happened, all right? So it said that below are winning trade took by John and Davis at the same time, but their outcome differed due to what? Previous 4 consistent what? Losses, all right? Because of the losses that they went through, John allowed this to affect his mental state. Therefore, and allowed it to ruin his trading journey. So instead of John allowing the trade to go at a better place, he developed a new strategy. He starts pushing the stop loss down when the market is going against him. But when it's going in direction or in favor, he quickly closed the trade. I've seen some before. I've seen this before. This game, I have seen it. So let's see what really happened to John, okay? So they all saw this setup, and then they enter a nice trade from here. John and Davis all sold at this point, okay? And when they sold, this happened. When this market make a long pullback, they say, oh, I have learned in this book, in this chart, in this chart that they are showing, when a trade, this is an engulfing candle, and then it means that the trade is about to reverse, then John will quickly close the trade. Look at what John did here. John closed the trade here at what? 0.3 R, right? Profits. Though it was in profit, but look at where John closed the trade. 0.3 R, all right? So multiplying the risk, which is 10 by 0.3, you are getting $3. John has closed the trade. But their target is at what? $20. John closed the trade at $3. Then Davis was in the market, and then it hit the TP very nicely. Why? David did not allow the previous losses to affect his mental state. Why so? Because David understands that it's part of the journey. He accepted the risk and also has understood that the previous outcome does not have relationship with the next outcome that will be coming. It's a random. And all that Davis believes is that at the long run, at the larger sample of numbers that he will be taking, he is in control. So his focus is on the long term, but not the shorter curve. But you can see John, no. I've seen John always have what? A way of describing, all right? So they saw this nice strategy here, giving some rejection upward, and then they thought that this trade would be a sell. They all entered a sell position here again. The trade started moving, and we know Brad John, all that he has learned in his journey of trade is engulfing. So once he sees anything engulfing, yes, the market is about to perform wonders. So John stood at this engulfing and did something beautiful to his trade. All right. So let's see what happened. John closed the trade here at 1.2 R. All right. And this was a very good money, $12 instead of $20. John has lost it out of it. All right. But what did Davis do? Davis stood in the game. So he hit his TP. Is it that David is performing some wonders? No. He has defined his risk. He has defined everything that is happening as a random. It happened on its uniquest way. Therefore, he cannot use the previous outcome to make his trade going some way, right? So he's always and every day on it, listening to the best or getting the best out of the market. Let's see what happened again. They had a very nice setup here, giving us a morning star, all right? And when this morning star happened, they all entered the trade again. Trade number 3, all right? They all entered the game again. John and Davis bought at this level, and then they had a very long push. What John do not still understand is that pullback is part of the system, but he wants the trade. Once it starts moving, you should go and hit the TP and return. So once John saw this, at 0.75 R, John closed the trade because he has seen some before. But David stood in and then TP was hit. Is it that he's performing wonders? They saw another nice setup. They all entered, all right? They get a very nice lock here. They entered, but it's quite unfortunate. This trade went against them and they lost. As for that one, John didn't say that, oh, let me close the trade though. He stood in. It will return. Hope is for the hopeless in the forex market. Hope is there for the hopeless. When you hoping in the forex market or in the financial market, you are hopeless because you're not going to get anything out. We don't hope. We look at other confluences. To either stay in a trade or to get out of the trade. You understand? Good. So they lost this trade very nicely, and then the outcome was 1 R. Everybody lost 1 R. But on a very long term, John developed another strategy again, that as this trade will be going, then I will not be setting stop loss. I will be in a trade because definitely it will what? Return to my direction. So John allowed the losing streak to affect his mental state. Davis, on the other hand, though he went through the same losing streaks, he accepted the results as part of the game, right? We continue. So this is John's trading results over 100 trade sample, okay? And we can see that this was a random taking, all right? But let's see what happened here. Some very dangerous thing happened here. They had to risk 1, right, which is $10. You have to risk 1, right? They had to risk 1. But though they were risking 1, which is $10 here, but John was actually risking more than that, all right? John was actually risking more than he can actually what? Get out of the market. Why so? Why is it so? we are all risking the same thing. And I know we are risking. So why is it that, as for me, please, a minute. Okay. So why is that, as for me, I need to do some one or two things before I can. We are all risking the same thing, the same risk appetite, the same thing. We want to do the same trade. We do everything together. Yet, John develop a new thing. I have to risk one, and I know we are all risking one thing. When we lose $10. But John went ahead. When he lose, he allowed his what? Stop loss. He doesn't even set stop loss at all. He lose 2R, he lose 3R, he lose 1.4R here. So when you add everything from this end, this and that together, you saw that John was not having an edge at all over the market. So out of the 34 trades that they took, John had 20 wins, a very good win, all right? John had a very good win. And if you have a very good win, what does it show? It shows that, yeah, it means that you have a very nice strategy. And your plan, you are following it, working for you, all right? But let's see what happened. All right? Out of the 34 trades that John took, he had 20 wins and 14 losses. This indicates that John has a high winning rate of 58.82, 58.82 and 41.18 losing rate, all right? 58.2, even 58 winning rate is not a very good, it's not a very small money, all right? It's a high probability winning rate. If you had even 50, 55, you will be the name. So how much more 58.82, all right? But when you combine everything together, we can see that John should risk one to win one, to win two, or to lose one. But here, John, according to the calculation, John was risking one, all right? He risked one, but everything together, he became 1.486 instead of what? Risking one for the losses. And then the wins, okay, was 0.795. How can you use this one to achieve something better? Why is it so? Anytime John entered the trade and see that things are not going on, this trade, I've seen some before. You see that John will close a trade here, put it 0.3, 1.2, 0.75, 0.30, 0.4, 0.8, 0.4, 1.1, 1.3, and 1.4. The highest gain that John was able to hold to his TP, or even his trade went better place, was what? 1.4. He couldn't even allow his trade to reach 1:1.5. John couldn't do that. But John is able to wait for his stop loss to hit very nicely. As for that one, John is a very good guy on that. Stop loss, stop loss, stop loss, stop loss. 111 hits. But here, John, it will come, it will come, it will come. Start pushing the stop loss down or upward until he got to 2R. He was risking more than that, so he virtually closed the trade. Here, the same thing, 1.4. And here, a matter of losses, that's 3R. Risking $30 without getting anything out of the market. All right. And John called himself a very good trader. John says he's a very good trader, as we all can testify. John says he's a very good trader. Why? He trades as many times as anybody can trade. All right. John is trading on a better note. But let's see what happened. John stopped taking even what? Jonas. He doesn't want to hear anything called what? Jonah here. John couldn't take anything. Why? He doesn't, it's not even needed. All right. So that's how sometimes that's how we also trade. We trade just like John. We are very good waiting for our stop loss. It will return, it will return, it will return, it will hit. Sometimes we push it down or upward, hoping it will return. But when we are in good position, instead of allowing the trade to hit our TP or even go a bit higher, once it will start making pullbacks, then we close the trade. And look at John's results. Out of 10 trades, out of the 20 trades that John took, he could not even get anything closer to what he risked. That's John for you. He's a very good guy. All right. So let's see what happened here. When you want to find your edge, okay, and you want to know that you are statistically what? Sound on the financial market. This is the formula you can use. The number of wins or losses, okay, over the total sample. That's the total number of trades that you'll be taking times 100. It should give you either you are having an edge over the market or not. All right. So per calculation, John had 58.82, which is a very good. But look at this. Look at John's funny thing that was happening here. Anytime John wins, he means what? 0.795. It's not even up to 0.8. But anytime John loses, on average, okay, this is on average strike. On average, John will be losing 1.486. Very funny. Very, very funny. But John, when you meet John and Davis, John will also tell you, I'm a very good trader. I'm a professional trader. And John will show you something like this. John will open his MetaTrader for you and show you that, look at my wins. He show you this one. And then you are also happy. You follow his steps. Then you'll be making a very good, wonderful trade for yourself. At the end of the day, you know, no, this forex trading issue is a scam. This is what has made plenty people, even when you speak with them, to them concerning forex trading, hey, master, you've gotten money and you are trading some into the data like that. If you have some, give me some to eat too. Why? Because of John's attitude. John's attitude has let many people believe that forex trading is a scam. All right. So, but his average risk to reward ratio was 1.486 R is to 0.795 instead of 1:2 R. Look at what John is doing. So let's see how this played out for John. Either he's having John is having what? An edge in a long term. So the edge is given by this formula, which is average means times his losses, his risk, his mean risk, okay? Instead of 2R, here John is having 0.795. And his average losses percentage is 1.486. So at the end of the day, we can see that John edge on the market. When you do everything together, John is having negative 14.43 R. So on the long term, you could see that anytime Please. Sorry. Oh, wow. Wonderful. So sorry. All this while I've been talking, I just, oh, I don't have anybody that tells me do this. So that's why.
Recording stopped.
Yes, so I don't know. I was not talking all the, you were not hearing all this. I just had a message in the chat box and I checked. Thank you very much, sir, for reminding me. All right, so let me go back very quickly and then, okay. So from here, what that I was trying to say that upon all these strategies that John is having, everything get back to zero. Not even zero, negative 144 point. Do not have any edge, and he will constantly lose money in the trading career. He will constantly lose money. He will, because until he come out of that mental slavery, this is how it is. We trade. This is how this candle means. So I have to. No. It's not every day that we trade with candles. It's not every day that we trade with indicators. Sometimes there are other components that you have to look at. And all strategies, every strategy and the kind of market and asset they work for. All right. So there are some strategies. When you're talking about asset and market, assets comprises of either Euro USD, synthetic indices, let's say VIX 10 or VIX 25 or 1S50 whatsoever. All right. Facebook, SP 500 here and then, they are all assets, all right? But when you're talking about market comprises of the Forex market, we have the stock market, we have the synthetic indices trading market, we have option and future, okay, they are all markets, all right? So you should know the difference. So at the long run, let's see what also happened to Davis. Maybe Davis stick to his plan, his trading strategy. At the same time, when he loses, he knows that it's part of the journey. He accepted everything. And also took what? Jonah, all right? He also took Jonah just to understand that it's part. This is just a comment anyway. I will take my time one day and also take you through how to keep a proper Jonah, all right? So that you will not risk. You use that one as your reference in your trading, right? So he took the trade number 2, the same thing, all right? The same thing, trade number 2. He continued on the sheet number 2, the same thing. Out of the 34 trade, he executed everything perfectly. You can see that on his average, this is what really also what happened to him. This is what happened to Davis, all right? Davis, on the other hand, took the same trade as John with the same win and losing rates, okay? Out of the 34 trades that they all took, he also had 20 wins and 14 losses, right? With the same calculation, everything. But Davis kept on with average risk to reward ratio 1:2. And let's see how this played, okay? So on the long run, we saw that Davis got up to 76.46 R. Then this guy is a billionaire. So in the long term, he will constantly win each and every day. If that strategy is working on that asset, on that same market, this guy is a billionaire. In the long term, nobody can beat him. Having a strategy that fetch you 76.46 is not easy, right? So we will not assure you that you are going to get this percentage win rate or an edge. Your edge is 76.44, all right? We not assure you of that, but you will get something closer to that, all right? In our program, you get something closer to that, and I know very soon. So putting the risk amount into this, there is on for what? 764.6 bucks, which is a very good money. right? But they were all using the same strategy. They all bought the same strategy, or their mentor fed them with the same what? The same setup. Maybe they were not even taking the setup. They were not looking for the setup themselves. Someone was feeding with them with the setup. Yet one lost everything and still in debt, and one is winning rapidly. So this showed that in the long term, Davis would continually having what positive results in his trading career. Should he continue using the same thing? So thank you very much for your time and everything. All right. So if anybody have a question, you can quickly unmute yourself and then any question, please. So you can unmute yourself.
Hey, hello, sir.
Yes, sir.
Hey, good evening. Oh.
Good evening, sir.
Oh, sorry. Today, I joined a little bit late. It was raining here, so our network was very, very bad.
Yeah. So someone called me from there telling me the same thing.
Yeah.
It's raining. So he joined and quickly he was stuck out. So he called me.
Oh, okay. Yeah. So I think the presentation was actually very great, and again, I've learned something new. Yeah. So I just want to thank you so much for the efforts and the time you're actually putting in. Yeah. The question I actually want to ask is in relation to stop loss and take profits.
Okay.
Yeah. There are instances where, let's say, you have actually taken a trade, and then you have actually set yourself, okay, you accepted that, okay, if the trade doesn't go on well, this is what you want to lose. If the trade also goes on well, this is how much you want to earn. Yeah. And because you were saying that sometimes we should not let the previous resource to actually determine the outcome of this new position.
Yes.
Yeah. So there are instances too where, let's say, you can take a trade, and then the trade goes into profits,
okay,
and eventually come and close, like it comes and it ends, let's say, in a loss, or it can even come and hit your stop loss.
Okay.
Yeah. So in that case, is it is it okay that way? Let me use the word. Is it wise to always do that way every time, or sometimes you can like just close and re-enter? Because yeah, sometimes to watch the trade go into profits and eventually close in a loss, it hits differently.
Sure.
Yeah, so I just wanted to find out. So sometimes I'm tempted to like
close.
Possibly close it.
Okay. All right. So let me give you a little bit about how I trade. Okay.
Okay.
Let me show you something little about how I trade. Sometimes, let's say this entry, okay. This is our entry, and this is our stop loss. And then let's say our TP. Let's say our TP is somewhere here. All right. Is our TP. We are risking 1:2 or 1:1.5. It's all the same. It's all okay. All right. So
yeah,
let's see this how this market reacted. If I want to, I'm in this position, all right, and this trade is running. And then once we enter the trade and started doing something like this, all right, going like
Okay.
this, of which we are in a very good profit now.
Profit.
Right? Yes. And then let's say go a little bit. Then if you are trading, I like the way you use the word wise. Okay. This is what I do. Because definitely, just as you don't want to leave money on the table, I also don't want to leave money on the table as well. All right. So the best thing I want to do, I will do, is that I'll break even. Anytime a market give me 1:1, it means that I'm in a comfortable lead. So I have to break even. All right. And break even, we all know does not give you, it should, on the normal sense, it should not give you any profit. But normally we break even a little bit above the entry because of swap.
Spread or hello, sir. Hello, sir. I don't know. Oh, I'm frozen.
Please, can you hear me?
Yes, sir. You're welcome back. We can hear you.
All right, sir. Thank you.
Yeah, you were explaining something and then the line dropped.
Sure. Okay. Okay, so I was saying that once my TP is, let's say this is my TP, and then I have my stop loss here, and then this my entry, right? Once the trade starts moving in my direction, the best thing I have to do is that I have to break even. And the break even, let's say when you're in, let's say $10, right? And my TP is around 15 or let's say 20. Just if you are in, just break even like $2. Okay, just $2. Just calculate and set your BE at $2. In doing so, should the trade return and even hit your stop loss, the stop loss will give you $2. This doesn't mean that you have leaving money on the table. It's not leaving money on the table. All right. Maybe you saw $10 and now you are having just $2. No, you've not leaving money on the table. The best thing that you did not run in loss. Why am I saying so? If you always think that you are leaving money on the table and in closing trade when they get somewhere here or here, a time will come you can never hit your TV. It will become your lifestyle, all right? And we can see that's what John started doing, and at the long term, he went into a very big loss. When the market do something like this, and we buy here, and the market come maybe we test, and they go again, and then somewhere here, and markets begin to come. Once a certain structure has not been broken, if me, I will never close my trade because I'm always looking for a specific structure to be broken. And once that structure is broken, then I can say, oh, then I have to close the trade. All right. So once that structure has not been broken, please, you can only break even and watch the trade. In doing that, let's say you are monitoring a trade, all right? Once you did not place a trade and you are working or you are just sitting there watching the trade, just watch the movement of the market. In doing so, you are learning. You are learning. You have the way to just spot some consequences that this particular asset respect or used to move. You might even get a chance to trade how or follow how the big guys also move the markets. Just say, oh no, this is a very good money. Let me close it. The question is that your target?
No,
that is not your target. So you have to be very careful. Don't think you are leaving money on the table. No, it's not leaving money on the table. When you follow that for a very long term, let's say for some period, and it's still not working for you, please, my advice for you is that change your assets. Simple. Change your assets. Don't say no. I've been trading this asset for a very long time, so changing would be a very difficult thing for me. No, it's better. It should be very difficult for you now changing it than to change it tomorrow. That way you cannot be able to. So that's if you are okay with the explanation, that's it. Okay.
I think I'm actually perfect. I'm okay with the explanation.
All right. Yeah,
thank you so much.
You're welcome.
The other thing too is when you showed the journal of John and Davis their trades, I wanted to get the table so that I could also keep a similar journal for my personal trades. Yes, something like that. Yeah.
Okay, but this is not a complete one though. But the best thing you can do is that let's say you take the first, right? You only look at what really happened. Was there a long push, a fundamental use or something that really sent your trade into loss? You write that in, so that every time something like that happened, maybe some candles that you were exporting, it will help you rather send you to your early grave. Just write it so that next time when you are entering a trade, you look at those confluences to allow you to do the best thing instead of following what you used to do almost everything that you throw money into the data.
Okay.
Yes.
Okay. All right. Okay.
All right. So is that all, please?
Yes. I think that's all for now.
Okay. All right. Thank you very much, sir.
Right. Yeah. Thank you so much too.
You're welcome, sir. You're welcome. All right. Yeah, Ketri. Sammy, please. What question? Yeah. Any question?
That's what they do.
All right. So, Petri, please, let's hear from you. All right. So, in absence of no question, let's look at one or two. How do we say it? Last week we looked at this asset on the volatility. All right. We look at this asset on the volatility, and then we had a very nice week. Actually, I did not trade this week. But I know those who traded. You had a very nice.
Don't have to shut him down.
Yeah, Darita.
I'm shutting down now.
Okay, so we did this analysis. Let me show this one. We did this analysis on VIX 50. All right, it's really been a very long time, but we can see how this trade has really respected almost everything that we did. VIX 50 is my brother, and I always, when I need money, I go to him to borrow something. He actually gives me a very wonderful profits. Sometimes he can, what brothers can do. Sometimes they can just do you one or with me, and then you be crying. But it's normal. See, yeah, it's normal. So this with 50. This is our very long resistance point of the trade has been following just like that. Just this week, we tried to get there, but nothing really happened. You cannot change, right? So I will not change anything in this setup. Why? We are waiting for better days, because I'm looking for my trade somewhere here this week on this area. Looking for my trade on this support, and then I will dive in to reach here. And then if it, because probably you have to break this resistance. This does not have to be broken. Else when it gets here and it cannot, then we have to go down. All right. So this is what we are expecting this week, right? That's from on the 4th going. This is what we are expecting, and it's going to play out. But once I'll be giving a guideline on the private community. So please, if you're not in the private community, just send me a WhatsApp message, and then once you've registered with our IB, we will add you to it. The private community is free. Only the term and condition is that it's either you are our student or if registered with our IB, then you have a very nice time to be in the private community. All right. So we look at rigs 25 as well. So 25, and then we look at 10. So this is also 25. So have given us a very nice area. Actually, where we are expecting this market to break didn't come, right? So last week this is what we discussed. But it broke this resistance line that we drew here, and then actually went a bit higher than we were expecting. Okay, and then we can see it's making a very nice support here. It's reacting on this support that was broken from here. So let's see, once it's able to break below this, then we can enter a very good trade, sell trade here, right? So you can see that from here, this trader is selling and it's still selling. I don't want to do any more touches, all right? I can see how this trade is selling. So you can only enter a sell trade after this resistance, after this support level is broken. So please take notes. Right, that's how nowadays I trade. I don't force trade. I only do my best. Right. So once this resistance area, support area is broken, then and tested, you can enter a very good trade. Right. And all this area will be yours, because already I've told you that this asset has to come. We are waiting for it down here on this yellow line. Okay. So this is a very good support area that we are expecting that it will come and retest. But you can only enter this trade once it has broken this green line here, right? Then it can be a trade to here. Then you can make a bounce trade here. A very nice buy on this setup. Then you take a very profit around 2085, all right? Yes. So let's quickly also look at VIX 10, and then if anybody has some assets you would like us to watch for you, then we quickly go over that one too. So these are the very three assets I normally trade. Though 100 is parts, but I like only these three because they are the trade that I've been watching, the markets that I've been. So last time when we did this, all right, when we did this, we saw what really happened here. We just play it there and see that what is going to happen next. We are expecting, and really, it hit our TP very nice. So those who took this trade, and okay, actually you are part of them. Please send me my collection very fast. Then we have a very nice double tap here. Then all the way, it also came to test this same support, resistance here. That's giving us a very nice double top. And then you can see where it's reached, all right? So once this support, it broke, it couldn't go far, all right? It has now broken it again. Wait till it is tested. Let it go wherever you want to go, please let it go. This is how I trade. So I'm just teaching you how I trade. I don't force trade. Once you want to become a technical trader, follow the rules. This is not financial Forex market. We don't deal with any fundamental news. It's purely technical. So once it's purely technical, always stick to this advice. Never enter a trade like this. I don't enter a trade. Oh, it buying, then I went. No, I look at other conferences, right? And the conference has been done already. So other than waiting, this trade should just go. Anywhere you want to go, it should go, right? And then when it tests, it gives us a test on this area like this, all right? Then I can enter a sell from here, and I'll take a profit. Why? It has not tested, so I cannot do anything. Or it can also give us something like this, right? Then I can enter a trade here. Then my TP will be somewhere here. Once it tests on this setup, this support again, I'm good to enter a trade. Other than that, it should just go hit, and then I can comfortably enter a sell, and this will be my TP. All right. So that's it for Let's 10. If anybody have any setup you like us to check, then let's do it quickly. Let's do it quickly. If someone have certain asset you like us to check for you, either on Forex or whatsoever, we will analyze. So $75. Okay. Wow. All right. 75 is one of the assets that do not respect anybody in this world. It's a missionary asset. 75 is a missionary asset. But it has a long-term structure that you can follow to trade, right? And this is some of the long-term structure. So right from here, you can see that we have a very nice support resistance area here. This is the other block. So just follow it. I like using other blocks, but it gave me, somebody will say, it gave me a hot. Right, this one has been broken, has been tested twice. All right. So this double bottom that has been given here, don't hesitate to enter trade right now. All right. This is what you have to do. Let this area, this is also another other block. All right. Let this area be broken. Once it's broken, let it give you something like this. Let it go here, give you something like this. Then you can enter a trade from here. Okay, this area. And then another other block here. You have another other block from here. Very nice one. Right. That was 75. I don't like it. Omushi doesn't respect anybody. This thing that we are drawing tomorrow, you can see it. It will break it and come and tell you story. That's for you, 75 for you. So this is a very nice other block here that you can use it to trade, okay? But just as I always say, trade like yourself. Just trade like yourself. I'm just giving the best I can to you. But anything you have to do should be like the way you trade. Don't follow to exactly what I'm saying. You should have confidence in what you do. I'm not those teachers or tutors that will tell you, no, do this by force. No, I teach you how to trade like your own self. All right. So once you know how to trade, you're always good to go. All right. So we can also use this one. Oh shit. Okay. This one. Just to guide you where you are going. All right. It's a very good resistance. When you use it, it will really help you. Right. So this is the only resistance area you are looking at. Right. So should this one go against you, then you know that structure is about to be broken. All right. So you can ignore this green line here and wait for this one to come and touch here. All right. When it touch on this, let me annotate it for you, please. When it touches here and give you any sign of reversal, you can enter a sell trade. All right. And then your TP will be somewhere here. Please, you understand? Please, the one who gave this
Yes, sir. I'm not. I'm following.
Okay. So once it gives you something like this, then you can enter a cell from here. Then your TP can be somewhere here. This is a very strong support that it has created. So you have to respect it, not the market. Remember, the market doesn't respect anything. All right. So you have to respect it. So it has given about triple top one, triple bottom 1, 2, 3. All right. So once this area is broken, right? This rectangular distance, diagonal rectangle is broken, then you can actually enter a trade from this end. Let's say this one is broken from here, then it tests. Allow it to test. All right. Then yes, sir. Hello. Hello. Can you please hear me? Can you please hear me? My network today is not favoring me at all. if you have any question that you want us to discuss, please, you can type it in the private chat room, okay? That's on the Telegram private community or on the WhatsApp page, and then I will attend to you. I think we've really covered a lot, but then though the flow wasn't all that there, but I promise next time it's not going to be like that. Yes, it's not going to be. I have to work on this machine. So if anybody having any more questions, then we can actually bring the session to a close. Thank you.